I could see the potential in trading. And I tell that to everyone, like the potential in trading is huge. That's why I didn't give up.
Yeah. Whenever people come to me like, oh, bro, I just saw a head and shoulders pattern, and I'm like, oh, bro, we don't trade like that.
Oh no, that's crazy.
So I go
3 years from that to this.
Yeah.
Damn, man.
Anything you'd say to the bro back 3 years ago?
All right, welcome back to the Big Wick Energy podcast. We're about to do some reacts. So I've chosen 7 videos that I think would be funny, and so is the bro. I haven't actually seen his, he hasn't seen mine, so we're just gonna go through it and see how we go. So let's get into it.
I made 31K through the first 7 days of the
31K? Bro, I gotta try this shit out. Hey, we have to start trading. We're gonna get rich. Bro, what the fuck am I even looking at? Alright, you know what? Fuck it. Holy shit. Holy shit! What the fuck? Oh god. Hi, can I speak to a manager? Hey, yeah, this is Mark. I fucking quit! Mom, I figured it out. I cracked the code. I love you so much. I won't let you down. Y'all coming different this year, man. Y'all not ready. Y'all don't get K in 10 minutes. Now I'm up and y'all broke. Hi, I was actually interested in, I'm a serious buyer.
Wait, that was actually you last night. No, that's crazy though. Like, I think every beginner trader gets that.
That euphoric feeling, eh?
Yeah, of like wanting to buy a Lambo and then wanting to buy a house and things like that. It's just natural.
Ring the parents, tell them that you made it.
Yeah. This guy was just telling me before, he was looking up how much golf courses cost. That's great. Hey, do you want to own one?
Oh, nah, I don't know. It was just one of those thoughts. I was like, that'd be pretty cool.
Yeah.
I want to own something that like a business that I enjoy. Like, you know, like something like whether it's something to do with golf or, I don't know, something I enjoy.
Yeah, nice. Wild. Right, next.
Do you turn it up a bit?
It's as loud as it goes. Wait, was he in a...
Yeah, almost hit TP.
Oh, that's why you need trade management.
Oh,
Trade management.
He's picking up what I was putting down.
No, but that's fact though. Like, you can't... What do you call it? Like, you have to be dynamic in the market. You can't be static. No?
Yeah, or just... Yeah, no, you have to be dynamic. Always be ready to switch things up or change to the conditions. I know it's just a cartoon, but like looking at that, you know, where he was targeting, where would you most likely have your TP if you got in nice and tight down the bottom there?
Oh yeah, it'll be at that high. Like that'll be the overall TP,
or potentially before it.
Yeah,
knowing that you might.
Knowing
that you might see rejection from there.
Yeah. Yeah, so, but like my one would be above, but then knowing that it's coming up to an area of potential rejection, because that's obviously what we teach in the trade management course. Just being dynamic in the market. Yeah, bro was just holding, but like why though? Like if you're up that much money, and then it's potentially getting rejection, and you're like,
yeah,
why would you not just go break even?
Yeah, exactly.
Yeah,
nice.
It took me 10 years to learn this trading strategy. I'm going to teach it to you in less than 1 minute. At 9:30 a.m., you're simply looking at the 15-minute candle. When that 15-minute candle is finished, you get the range high and the range low. Now just drop down to the 5-minute time frame, and we're just going to wait for a candle to break outside of that range high or that range low and then close. You can see we just had that happen right here. This tells us we want to look for buys. Now we just need a place to enter a trade, so let's mark up an area of recent support. Maybe you enter at a trend line like this, and then when the price comes back to that level, you're into that trade. Price eventually pushes all the way up and smashes your take profit.
What did you see in that setup. Was there a setup?
Yeah, I mean, like, this is what, 15-minute?
Yeah. Oh, we can go with that.
Oh, didn't he say it was on 15-minute?
Oh, did he say 15?
I'm sure he said it was on 15-minute.
Oh.
But yeah, because he said he was looking at the 15-minute time frame and then he drops down to the 5-minute for the pullback.
Yeah.
Blah, blah, blah. So yeah, seeing in like internal chotch and then the pullback. And like looking at that, like that's how I used to trade GJ when I first started.
Oh, trend line breakout.
Like a trend line breakout. Looking at it now, it was that. It was like prices coming up wherever it is, building that trend. It'll drop down below, which will be a change of, like obviously I know now it's a change of character.
Yeah, yeah.
It's just going from bullish movement to, well, in this case, bearish movement to bullish.
Yeah. I just think it's crazy like where his stop loss was, like
all the way at the low?
Yeah, like if we were running our strat, we're running lower time frame confirmation.
Yeah.
We're not sitting all the way down there.
Yeah. Well, yeah, that's what I was talking about with the mentorship tonight, because they were asking, like, would you not put your stop loss all the way at the low? Well, if we've created a change of character to the higher high and then it's come back down, created that higher low and yeah, it's already created a new low, so you don't have to put it all the way at the low low.
Yeah. I used to, that guy there's like what I first started watching was that Pat fella. Just because.
What's his name?
Just Pat. I think it was Trade with Pat. But it was just because his like marketing was like, like, I don't know, all that AI generated like cartoony looking stuff.
Right, yeah. Yeah, nice. Yeah. Just standard structure, man.
This is the reality of trading. Winning all the time does not make you a great trader.
Is it like which trader would you rather be?
Yeah.
Does. The key to long-term success in trading isn't about the daily profit.
I mean, trader A is like no emotion at all. Like lost, carried on with life. It is what it is.
Yeah. I think there was like more to it, like routine,
Yeah.
Like trading's not the be all end all. It's just,
Right.
It's like part of her lifestyle. She doesn't let the loss affect her. She still carries on with her day to day.
Yeah.
Old mate stuck at the screen watching every candle go up and down.
Yeah. And what did he finish on? What was he obviously made money that day though?
Yeah, but I think it was just his emotion behind it. Like he was glued to it,
That's crazy. That's wild. He obviously made money though. But to be like, if you can make money on a consistent basis and have no emotions like that chick,
yeah,
that's what you want. That's the trader you want to be.
Yeah, I don't think it was more targeted at like the win or loss. It was
she's a loser.
Wow.
Just jokes.
Oh yeah, I'm not trader A then. I'm trader B. I love sitting at my desk.
I accidentally made $7,000.
Oh, this guy, bro. Is this Huvier?
What the?
Yeah.
Hey. Wait a minute. Wait, what's going on?
Does he keep moving his TV?
Yeah,
There's no news. Why is this pushing like this?
but he's not too sure why the market's
Bro, what's going on right now? What is these candlesticks?
accidentally.
I'm closing.
Like you can hear.
Order cancelled.
7,000? I have literally no idea what the heck just happened.
I don't know whether he makes like videos like this as like just for show, because for a trader like him to not be successful doesn't happen on accident. And I feel like there's so many videos of him like saying he made money on like accident or he doesn't know what's, but I feel like he just does that just for the show.
Yeah, because that That would have been some big fundamentals for a price to do that.
Huge. And if you're at his level where you're making that much money and you don't know what's going on, like that's crazy.
Yeah, I thought that was a bit of a hoax.
Yeah, I reckon. Yeah, I don't know. I honestly don't know, but I reckon he makes videos just for that stuff. But if you don't know what's happening fundamentally, what you can do.
First plug.
First, use market. Link below.
Yes.
Personal account versus funded account.
With a personal account, you keep 100% of the profits you make. Unlike a funded account, it's typically an 80-20 split, meaning 80% goes to you and 20% goes to the funding company. With a personal account, there's no rules. You can put a trade on and leave it overnight, over weekend, that's entirely up to you. With funded accounts, there's typically pretty strict rules, one of them being you can't leave a trade on overnight. With a personal account, you can lose all the money. If you put in $1,000 and you lose that $1,000, it's gone, right? With a funded account, it might cost $100 to get access to $50,000. And if you lose that account, you only lose that $100 that you initially invested. And finally, limited funds. Not everyone has $100,000 laying around that they can invest into the market. That's why funding companies give you the opportunity to pay $100 or so for a large sum of money to trade with. What do you prefer, funded or personal?
It's my guy. He just moved to Dubai.
I'd say the Dubai Flyer.
Yeah, I haven't watched it a few, but I've seen it. And like everyone knows my stand on funded or personal. I mean, the way that I look at it is with funded accounts, you have rules that you have to stick by. Like you're made to be disciplined. If you're not disciplined, you lose the account. So for me, like that is a good way for beginners to get into it. And you know, some of the traders that come through the mentorship, one of them at the moment, he has I think Top Step does like a lock on your account.
Oh yeah, lockout.
A lockout, yeah. Is that a thing?
Yeah.
And so like if he's like won his trades or like done whatever his goal is, it just locks him out and he's not allowed to trade for like 12 hours or 24 hours or some shit.
Yeah, it's till the next open.
Yeah,
you know how futures opens and closes?
Yeah.
It's not until the next day.
Damn, that's crazy, bro.
Yeah.
See, I think that's good.
Yeah, 100%.
Yeah, that's good for people to be, you know, learning discipline and stuff. But with a personal account, like the bro was just saying, is that there's no rules. You can risk more. You can do this. You can do that. But then also like how we were saying, you know, you could lose the entire trade. Or if you're not putting a stop loss on, that's your own fault.
Yeah.
Like you're just trading dumb. But like anyone that's going to chuck in, you know, more than $10,000 has to be a profitable trader. Otherwise, you will just lose the money.
Yeah.
What do you reckon?
Well, obviously, beginning of my journey, like I came through the funded stage side of things and used the payouts in that to build the capital. But yeah, obviously being under you and learning from you, live is where it's at, and the power of compounding. Like I'm pretty firm believer on that, you know. And I feel fundeds take that away. I think I mentioned it in the previous podcast, but they just take that. Yeah, they just take the whole angle of compound away, you know.
Because of the payouts, eh?
Yeah, and then you're blowing accounts and you're losing, you know, that reinforced belief of, you know, not what's that coming in now? That you can't trade, and you just I don't know. I just don't like that they can define you as a trader. Those funded accounts when you blow them.
Yeah, and that's it. That's it as well. Like the payouts is shit. With your personal, do whatever you want, man.
Buy cars and everything.
Cars.
Very good question. So if you're just starting out in trading and you're wondering how much money you should be putting into an account, if you have $100,000, do not put that money into a trading account. The statistics are showing that 99% of people that make a trading account are losing their first account. Doesn't always happen, but unless you're fully educated in trading and know what you're doing, then I'll just put $100 in, see how that goes. If you can get $100 to $200, increase it. But the money that you start off with is not the money that is going to make you the bigger income, the money that's going to let you leave your 9 to 5. Okay, so start small, get consistent, grow your account, and then you can look at making more money, putting more money into an account once you have that consistency and winning. Simple.
Bro, you literally just said that. You literally just said that to our previous video.
Like, he's a smart guy. He's a smart guy, that guy.
He is, eh? Right.
Oh, bro. That was
little throwback.
That's a huge throwback. How many years ago? That must have been 2022.
Damn, 3 years?
Yeah. That's 8, bro. It feels like a lifetime ago. I didn't even have a bed there. I never used to like a bed either.
Yeah.
Like, until I moved here.
Oh, that's wild.
That's facts, though.
It's cool to see, like, that was your, that was a firm belief back then, 3 years ago.
Yeah.
And you still hold that today.
Yeah. I swear, like, when you were first getting into your live, I swear that was what I told you.
Yeah.
I tell everyone that.
Because I was like, hey, bro. I had 100 grand.
Oh, bro.
But I didn't go back and watch that video.
That's crazy. That was like one of the first videos I did on TikTok. And I think like the few after that as well, like started blowing up. Like there was, I don't know. I feel like listening to that now, if I listen to that advice right now, like I'll be like, oh, bro knows what he's talking about. You know what I mean?
It's on back. That's crazy though. 3 years, eh? A lot's happened.
Bro, 3 years.
A lot's happened.
Like looking at that, like setup, that was actually in my son's room. I had to have my setup in my son's room because we lived in like it was a right house. Like it was old. It was old, but I had my room and then my kids' rooms. And so my setup was in my son's room because he used to play the game.
Yeah, yeah.
And so, yeah, that's where that was. Crazy, man. And then here we are.
Here you are.
3 years. 3 years from that to this.
Yeah.
Damn, man.
Anything you'd say to the bro back 3 years ago?
Don't give up.
Stare into the
Just don't give up, man. No, actual though, like back then, I was like, I don't know whether I was delusional, but I could see the potential in trading. I tell that to everyone, like the potential in trading is huge, and like that's why I didn't give up.
Yeah,
I didn't want to give up because of that reason. And like there were times that I wanted to give up, times that like, is this actually real? Does anyone actually make money off it? Because I was just losing money, and it wasn't until obviously I found a mentor or found someone that could help me.
Yeah,
yeah,
nice.
Just don't give up, guys. All right, those are all of yours?
Yeah.
Right, now we're going to get into mine. Mine are a little bit more psychology, eh?
Oh, testing me?
Yeah, I do. I wanna hear your expert opinion.
Expert
on them. But here we got our man Craig Pokoko.
Wow, nice fill there. Just waiting for a push now. All right, starting to get a nice push. That's what I'm looking for. Wow, that's a good fill. Oh, my brother's gone home. Yeah, that's what happens when you start complimenting your own trade. I deserved that one.
The old mid-range trade.
Oh, that's facts. The old mid-range trade.
Yeah, well, I guess that's where that went wrong for me. And that, I don't know, I guess I'm either looking at the buy from the bottom or the sell from the top. I'm not really looking at anything mid-range. That's probably something we've implemented and takes away that psychology second guessing side of things, keeping things simple, trading from the extremes. That's I don't know. That's my view on that one anyway.
Yeah, it seems like that. It seems like he was. I mean, I don't know. We don't know, but usually when you get a setup like that, it's within the range, and you're getting a reaction off a direct decisional point of interest.
Yeah.
And then like it can push you away.
But how many times does it happen?
Yeah.
Yeah.
Whereas if you're taking those trades off the extremes
with confirmation,
easy. So we won that.
That's been
trade
massive
today.
for me this year. Like obviously, again, like learning from you is, finding my edge and knowing to trade off the extremes and take that pressure away from trading. The stress-free trading, I guess, rather than trying to find everything mid-range. And then a few grey hairs along the way. Yuck.
Yeah. It like now after like solid months of just trading, or not months, but like, a decent amount of time. I think it's been like a month of just trading extremes and like taking all the other trades out.
Yeah.
Like you just can't go back.
But also got to remember, it's not off one pair. Like we're trading like 8 different pairs.
Yeah, so I think that's where a lot of people are like, just trading off the streams hardly ever happens.
Yeah, because they think of gold.
Yeah.
Or one symbol, whereas we're trading potentially 8, and there could be 3 or 4 setups in the day.
Yeah, which is wild. And even if you're just, no need to explain.
Don't give away too much sauce.
Watch the Instagram. Do you know this guy?
No.
There was a guy I worked with at Merrill Lynch back in the early 80s, and he was a devout person religiously. We used to have conversations a lot about what I felt was an inherent conflict between him wanting to be a successful trader and his religious beliefs. And he just refused to believe that there was a conflict. He was down on the floor for quite a while. He was a one-lot trader, 1 and 2s, and he barely eked out a living, like $50 a day or $75 or something like that. Then he got on a bit of a winning streak and started accumulating some money. And he was in the pit one day and literally snapped. He was in the S&P pit. He had 200 or 300 contracts on. And by the time somebody from the clearing firm found out about it, he'd lost about $1 million. The conflict got to the point where he just literally snapped. He just kept putting on a larger and larger losing position until he forced himself out of the business. What I'm saying is that beliefs can exist at 2 different levels. And you can be consciously aware of your beliefs, and they can drop down to a subconscious level of operation.
So the bro just kept... Oh, damn. 200 to 300 contracts? That's crazy.
Bro, he's at Merrill Lynch. Like, he's actually a Wall Street trader.
Damn.
And he just got stuck in that psychology.
That I can't lose. I'm not wrong.
Yeah.
I must be right at some point.
You know what's crazy, though? Like the bro was saying, he went from doing like $50 to $75 a day or whatever.
Yeah.
That's what he was saying, eh?
Yeah.
To having a little bit of a win streak. The confidence is rising. And then all of a sudden, bro's chucking hundreds of contracts.
That's crazy.
What?
I think that, and that just breaks away from consistency, like sticking to consistency, discipline into your plan.
Yeah. Well, discipline.
Getting a taste of the green grass and then full margin.
Yeah. See, what I think happened there, like from a psychology perspective, is he was starting to get consistency in his winning streak, right? And he was just focusing on the consistency. Oh, I'm winning.
Yeah.
The consistency turned into his ego, where he only got that consistency from the discipline.
Yeah.
And so if he was able to keep that discipline, then that consistency will continue. He would have stayed on that winning streak, but he wasn't disciplined with, okay, I'm only going to do 1 or 2 contracts, like he was just saying.
Yeah.
And all of a sudden, the bro's like, nah, I'm doing 300. I need to win.
Yeah. That's massive ego.
Bro, like
not
what?
Getting out of that and then going under.
Exactly. Like, why would you do that?
That's crazy.
Don't do that. That's when you go against your discipline and your trading plan. That's where people lose accounts. Don't do that. And if you want to learn about it, it's in our psychology course.
Oh, this guy's on fire. This is great.
So we do have a protected low here on NQ. I'm going to enter off this bullish for value gap. I'm going to close out at this high. Bang.
Can we just watch that one more time, please?
So we do have a protected low here on NQ. I'm going to enter off this bullish for value gap.
Loves an FVG.
I'll close out at this high. Bang.
I mean, don't like FVGs, but men's took profits, secured profits. I'd be looking at price action. I would have been more inclined to manage that type of trade because it's looking pretty bullish, like it was, you know, moving in a direction with purpose. So,
yeah,
I don't know.
Yeah. Did you see anything else in there?
Like our setup?
Yeah.
Yeah. Oh, yeah. Sorry. Yeah, I saw that.
Yeah.
Chotch at the bottom, pull back into a point of interest. Point of interest quite often are below FVGs or, you know, at the more extreme point.
Yeah.
So you can get a more refined entry, not just in no man's land. I hate FVGs.
Bro, I've never understood why people use FVGs when, you know, I don't know. It is what it is. However,
like the students ask about them, and I don't like say no, don't worry, like fuck that. But I just say like you can use it as a magnet if you want, like a point of interest. If you collect data and think price is going to come back to it, but start collecting data on entering off it and then watching it come back for your point of interest.
Yeah. I often say like I don't use SVGs. Fuck them. But I make sure that, you know, they understand like my perspective on it is like everyone's gonna. I mean, a lot of people look at FVGs now, and so because it's a FVG and people are like, oh, it's a FVG, like blah blah blah. How many other people in the world look at it, and so that's why it becomes something. You know, just like the gap opens.
Yeah,
it's just all it's doing is like price ended here on a Saturday. Price opened here on a Monday.
Yeah.
And people like trade into the gap. It's not really something, you know, other than imbalance, which is going to get filled.
Yeah.
But everyone's like, oh, I've got to trade into the gap.
Yeah.
And then it becomes something. And then everyone does it.
Yeah. I always notice, like when I was doing a bit of data collection around FVGs, because I was once upon a time looking at them.
Yeah.
I started to find that.
And the other education one?
But I found like lower time frame, you know, around the 5 minute mark, it would come down to an FVG, and it would actually be inducement for the actual move. So it would induce, you know, you'd get the move. Yeah, look, 1 to 2 off an FVG, you might get it, or 1 to 1, but that would be the inducement. Come down, that's liquidity into a point of interest for the actual move, and that's what I was finding over time.
Yeah,
you know, with the data that I was collecting with. Obviously, the setups I was looking at is that's what was happening, and I'd rather get into a 1 to 5 than a 1 to 1.
Yeah, just to not miss the move.
Yeah,
that's what I think has happened. I mean, I'm not an expert.
Like a bit of a FOMO move.
Yeah,
like we're going to see a reaction from here. Let's get in on it.
Yeah, FOMO VG. I like this guy. This guy's Mark Douglas. He's the one that wrote Trading in the Zone.
Oh, yeah.
Because here's what happens when we're operating out of fear. I'm going to give you a real quick example, and I'm going to go into the whole belief system in more detail. We got support, we got resistance, market comes back up, nice trading range, comes back up to resistance. Now the market's coming down to support, and I'm a typical trader operating out of the fear of being wrong, the fear of losing money, the fear of missing out, the fear of leaving money on the table. And as a result, not having learned how to think in probabilities, that analysis will not prevent the experience of me tapping into the accumulated emotional pain of what it means to be wrong and lose money. That analysis cannot prevent that from happening. So what I have to do is I have to take it out of a right or wrong, win or lose context. We're taking your trading, we're redefining it so that you have no reason to associate the experience of an outcome of a trade with what it means to be long. This has nothing to do with losing. So you're not a loser. Take it out of the right or wrong, win or lose context, and you're going to experience freedom.
The game of probabilities and sticking to your system, essentially. No matter what. Well, yeah, my read from it is no matter what, no matter what strategy, you just got to stay disciplined to it and stick to the one and work the losses into your system.
Yeah.
And then build the stats, not be affected by your losses, but stick to the game plan.
Yeah.
As soon as you change after that loss, it's a variable. Out goes the data.
I like the way that he looks at things as well.
Yeah.
He looks at it from, and like everyone should look at it, and I tell people to look at it from a probability perspective, of what price is going to do. And if you're not, if you're looking at it from like a win-lose perspective, it's like you get scared to go into a trade.
Yeah.
Is it going to win off this? Is it going to lose off this? But then if you look at it from, okay, we're at this point, what's the probability that price is going to continue to go up? Is there space for it to go up? Is it potentially going to get rejection from here?
Yeah.
Just looking at it from those different perspectives rather than, is this going to win or lose?
Yeah.
Yeah.
Red or green.
Yeah. Pretty much.
I like that.
Yeah. He's nice, bro.
I think even before you get to indicators, moving averages, anchored VWAP and that, you have to have a solid understanding of market structure and supply and demand. Everyone's obsessed with cups and handles and with heads and shoulders. And if you think about a head and shoulder, everyone's just trained to look at a certain pattern. Very seldom do you hear it explain what that pattern actually is. So we have a stock in an uptrend making higher highs and higher lows. So we have that high and it comes down to this level. We have a higher high and it comes down to that level again. So we have maybe a left shoulder and a head, but then we see a lower high, and then we break down and we make a lower low. So all we're doing is changing this pattern of higher highs and higher lows to a pattern of there's the lower high, be cautious, there's the lower low, it broke it, that's the completion of your head and shoulders.
I still crack up. I think it was, when did I first start with Ambitious in the education? It would have been January, February, it must be March, early March 2024, and it's when I started messaging you. And I always remember, bro, I've just seen a head and shoulders pattern. Is it going to sell off? Seen.
Did I?
Yeah, I was like, oh. And then like months, and then we got into mentoring, you mentoring me, and you're like, bro, I don't give a fuck about head and shoulder patterns. And then it just made me flash back to that moment, bro. I can remember where I was and everything.
Actual.
I was up on my land in New Zealand, my property.
Yeah.
And I only get reception at the top of the hill. And so I went to the top, drove to the top, and I was messaging you, and you were like voice messaging me back. And then I was like, bro, head and shoulders pattern, fuck all reception. And I just see the scene. I was like, oh, mean.
Oh, bro. I mean, that's the reason why, though. Like,
that might not have been the reason why. You left me on scene. You're a busy man.
No, it was. No. Don't ever message me about patterns.
And so now, like in our mentorship, whenever people come to me like, "Oh, bro, just saw a head and shoulders pattern," and I'm like, "Oh, bro, we don't trade like that."
Oh no, that's crazy.
Or I go, "Oh, send that to Huddy."
Do you actually? Oh, bro, that's wild. Whenever I've looked at head and shoulders, like when I first started, I was looking at like patterns, but it didn't make sense to me because I was like, why does that pattern set up? Like, why in the financial markets isn't it setting up to like that, and then it does this? That didn't make sense to me because I wanted to know the why. And it wasn't until I found out the why that, it was just going from bullish market structure to bearish market structure. But then people just put a label on something so that they can view it from a different perspective as, okay, that's happening, let's do this. you know. But then you could sometimes get like a head and shoulders happen and there's not actually clear validation and confirmation.
Yeah.
And then you just get hit out of it.
Yeah. I can't remember what they just mentioned on that, but like, yeah, closures and stuff like that, confirmation, like you just said.
Yeah.
Like you could see a head and shoulders, but it might just be wicks, you know, like not the closure for the chotch.
Yeah.
Change of character.
Yeah. Yeah. Sorry about that. Oh, that's crazy, bro. Can you skip that one?
Big thing for retail traders, of course, is that they want confluence of a bunch of different indicators to line up properly. Institutional traders, do they do it that way?
Not exactly. Again, in all the trading books, they're identifying support or resistance levels. Or, you know, the books say don't buy at support. Wait till prices, because you don't know if there's any buyers there. Let prices turn, wait for confirmation, wait for a reversal, and then buy. We don't like confirmation. We don't want confirmation. When price is down into a level where we determine banks, institutions are buying, we want to buy it right there. If we wait for confirmation or a reversal or any lagging indicator or oscillator, all we're doing is increasing risk and decreasing reward. Goldman Sachs doesn't say, wait, don't buy yet, wait for prices to rally a little bit and then buy. You know, they don't do
that. Smart money.
Oh, bro. The amount of times that I tell people that. And like you do want to wait for confirmations of different areas, which, you know, we're often getting that on lower time frame. But for most people that are coming in, and like there's been so many people coming in lately that have been like, oh, bro, I haven't traded anything lower than the 15-minute.
Yeah.
It's like, bro, off the 15-minute, you're waiting for so much things to happen, so much movement in the market before even getting in. And that's why you're getting in and only getting like 20 to 30 pip moves, if that.
Yeah.
Which is wild.
Just off the back of that, like, yeah, the whole that whole shift, that mindset shift that you've kind of instilled amongst the community of thinking like the institutions. Like we all go, oh yeah, we trade smart money concepts, but we forget to actually think like them.
Yeah.
And that's not until you start going, oh, like recognizing key levels, and it's like, well, if you're an institution and you're overextended, are you still, you know, bullish? Are you really buying from here? Or are they getting ready to wipe out every buyer in the market?
Yeah.
You know?
Yeah.
And so it's not until, you start thinking like them.
Yeah. That's what you need to do. Like if you want to be super, super rich and profitable, which obviously these guys are, like hedge funds, crazy money. But there's a reason why. And there's a reason why they're consistently profitable all the time is because, but then like we take it back, like let's take it back to the intermediate course of what we're teaching, which is trading ranges. And in trading ranges, we've got discount and premium. And so as price is coming down, which is what we're, you know, the trading range and then 50%. And I use this analogy all the time about buying shoes and like us going to Harbour Town buying shoes. Bro, some of those shoes I don't even like. You know, those Jordans and stuff. But for it to be $40, like a pair of Jordans for $40, Australian, like that's crazy, bro. I'm buying those. I'm buying 4 pairs of those just because they're $40. But you ain't going to see me buy $200 pairs of Jordans like when they're on sale for retail price.
Yeah.
Sucker. Oh, that's crazy, bro. But you just gotta think like that. If you want to be super successful and price is coming down to these like areas, like price is going to get a rejection from these areas, more than likely extremes. Because if you are an institution, you're trying to buy in at the best price possible.
Yeah.
I know I would be.
And, and sell at the best price possible.
Yeah. And that's how fucking market structure is created. You buy at the best possible price, you get rid of your positions at the best possible price.
And it drops.
Yeah. And then it repeats. So hard.
You see, this is one of the reasons why finance is a lot more challenging than physics. In physics, if you try to drop a ball in a gravitational field, it won't change its mind and say, gee, now I'm going to change the gravitational constant on you just because you're testing me. But in financial markets, the moment you try to take advantage of this pattern, the pattern changes. In fact, the more you try to take advantage of it, the more quickly the pattern changes. If you do this a lot, if there are a lot of people trying to predict patterns, then you know what you get? You get no pattern. You get randomness. That's the idea behind an efficient market being random. If it were not random, then that means that there aren't enough people who are bothering to try to forecast the price and incorporate information into the price. Another way of putting it is that a market is highly competitive. It's hard to make money in those markets.
I like that. Well, I think what that ties in with is something I've covered on my pod call today in the mentorship was, we see a setup and we see confirmation, but sometimes it can happen within 5 minutes or it can happen within 2 hours or more, And so looking at the chart, it won't look like your normal pattern or whatever you might see. Like it can, a chart can look, refined, or it can look stretched out like it's, and so that pattern always changes.
Yeah.
And that's what I was, going off that, it's the time that changes with it as well. That like the time changes the look of the pattern, if that makes sense.
Yeah.
So I like that.
Yeah. Yeah, those are good. Like, especially when you get people like that are teaching economics. And like how he's saying, like, the market's random and, it's doing this and doing that. And like when you think that you've got it and it doesn't happen, what it's doing for, everyone that is, have some idea in trading. These are the institutions trying to induce people into buying because they want your money.
Yeah.
And like when you, just before as we were talking about it, like when you're thinking in terms of like a hedge fund or institution, whatever, the guys with the big money, what are they likely to do at certain points? Because those are the guys that are going to move the markets. Retail traders can't move the market.
No.
Like you have to go with what they're doing. Institutions are going to move the market. So you have to think at this point, what is the institution going to do? Is it very likely that they're going to be getting into this trade, to be pushing it? And, just like that trade that we got today, and it ran, I think it ran like a 1 to 20.
Off the extreme?
Yeah, off the extreme.
Yep.
Yeah. And like that was, for everyone that's in the mentorship or the education platform, that was simple for everyone to read. And I think a few people got into that.
Yeah.
But then for like other people that aren't looking at it from that perspective, it makes it a lot harder for people to actually win in this trading game. And that's why a lot of people do fail, because they come in with like an education that's not suited. You need the right education.
And mentor.
Yeah, there's some source on those videos. There was some key gems that you guys can take from this if you listen to the facts coming out.
Linda, listen.
But yeah, that's another potty for us done. The reacts. I know a lot of you guys wanted to see this, so here it is. We're going to be doing a couple of these a month and a couple of other podcasts a month. Yeah, you guys let me know what you think about all of these different videos that we went through tonight. If you guys have any comments on them, if you think differently to what we're saying about them, we want to hear. And we're going to be going through all of the comments, replying to all of you guys. So make sure you comment, make sure you like, and make sure you subscribe. And we shall see you on the next podcast.
See you.
Trading highs on a ride, from doubt and fear to joy inside. With every lesson learned, I grew. Ambitious investing pulled me through. One